Educate. Celebrate. Connect. Arizona Hispanic Connection.
Welcome to AARP, Arizona Hispanic Connection, for another very informative show. The topic today is taxes. So stay with us. We will be sharing very, very important information about tax filing. And we have a special guest today. But before I introduce my guest today, I would like to remind you that all our radio shows are Facebook Live. So if you haven't visited our page, we ask you to do so and follow our page and share it with friends. We would like to reach more people, and we will appreciate if you can help us do that. Also, please know that we are promoting events, community events on our page, AARP Arizona Hispanic Connection. And there you will find all the information. We are showing a documentary this Saturday, actually, the 14th at the Peoria Community Center. You will find all the details on our Facebook page, including a link. Click on that link, register, and join us. We'll be serving a complimentary breakfast. So again, we ask you to help us in that regard. I have Frank Varela. Frank Varela is our special guest today. And Frank is a volunteer. He's retired, but I understand you volunteer for the Humane Society?
Yes, that's right. Humane Society, tax aid volunteer.
For AARP's tax aid program?
And the Area Agency on Aging.
Those three must keep you very busy.
Oh, they are, but it's a pleasure. I mean, I enjoy working with people and helping people. That was my whole goal in life. Now that I'm retired,
and especially, I'm sure you did it while working, and now much more when in retirement.
Oh yes, definitely. Now that I have the time, it's good.
Perfect. Well, thank you and welcome, Frank.
Well, thank you for having me. It's always a pleasure to come here. I know I enjoy your show because you provide so much good information for the public.
Thank you.
It's very good.
Yeah, you always say yes to my my request to have you on the show. Thank you very much. So, recuerde que después de estos 30 minutos, los primeros 30 minutos serán en inglés. Y seguiremos con 30 minutos en español, como es de costumbre ya los martes que llegamos a ustedes en inglés 30 minutos y seguido por 30 minutos en español. So Frank Varela again is our guest. I would like to talk about why we pay taxes, right? And then talk about the deadline and how we file taxes. So we're going to talk. We're going to address a few very important topics, and let's start with the type of taxes that we pay, right?
Okay, yeah. Well, typically with the IRS, what we were looking at now are income taxes.
Right.
Okay, so any income that you get, there could be a tax on it, or there should be, and that money's used, to run America or to run the country. So a lot of people don't want to pay taxes, but at the same time, we'd like to enjoy the benefits of paying taxes.
So just like we work and we get paid, the government doesn't work. They collect the taxes, but they still have to run the country pretty much.
Yeah, exactly. And there's so much stuff. I mean, other countries, unfortunately, don't have what we have here, and it's because there's no money. Okay, they don't collect taxes, so at the same time, they don't get the good benefits of
right.
taxes.
So basically, we're talking about, even Social Security, Medicare, the FICA tax.
Yes.
It's employers, those of us who work for an employer, they retain the Social Security, the Medicare tax. Any unemployment?
Yes, also as well. There's unemployment that they provide, and it's good because when you work all those FICA taxes, I know at the time people are saying, where's that money going to?
Right.
But when you retire, you get Social Security, you get Medicare. So it is being put to good use, as well as unemployment. The unemployment also. If you do get unemployed for a certain amount of time, you get paid.
Right. Now, is the unemployment that sometimes people who lose their jobs that they get, does that come from like a federal fund?
Most of the time, it's a state fund.
A state
But I'm sure the federal has some money that they put
because
into
there's a lot of interactions between the federal and the state, correct?
yes, yeah,
they send a
definitely.
lot of money to the states,
Definitely,
correct?
definitely. The states are always, I don't like to use the word, but kissing up to the federal government because they need money.
Right.
You know, the state can't produce all the money that they need. So
Right.
we do need federal help. And we're paying federal taxes.
Right,
You know,
right.
so it's only fair.
And it's 2020. The census is coming,
Yes,
starting,
yes,
I
yes.
believe, if I'm not mistaken, April
In
or
April,
in
yes,
April.
yes, yes.
So even the count, even
Yes.
making ourselves count is so critical because that's where also the federal money sends money to the state, right?
Exactly. Depending on the amount of people that are there. So it's good to count everybody that you can.
So, do you think there is room to not hate the government? I mean, because people typically, anybody that takes your money,
Right.
you kind of don't like them, right? But is there a
Exactly.
positive side to it?
Well,
do you think?
I guess the positive side is, if, like I said, if you've ever been to another country when there's no running water, no electricity, then you kind of say, yeah, it's good. I personally don't mind paying taxes, my fair share. I guess that's the key. Your fair share. of
Okay,
taxes,
okay.
You don't want, like they say, the top 1% don't pay any taxes, and then the lower class pays more, the middle class pays more. But they're working on it. Hopefully, at some point, it'll be fair for
Right.
everybody.
So I also understand that that we also file state taxes, and this applies to almost every state, but there are some exceptions. Correct?
Yes. There's, for example, Texas does not have state. Oregon does not have state taxes. So, but here in Arizona, we do file federal tax and we file state income tax as well.
So they are two separate, I guess, forms. But
Yes.
typically, when we file taxes, they kind of lump them together.
Yeah,
right?
well, actually, the two, the one form, basically, we start out, especially like at the tax aid, where we do the federal. Okay, all that information. Once we get done with it, it transfers down to the state, and pretty much the state has different rules, so it's automatically the programs that we have, tax layer, and what's the other one? the one that we have now actually will calculate the taxes for both state and the federal.
It seems like once you make ends meet,
Right.
you maybe feel a little better of paying taxes, but when you're struggling, that's when you hate it the most, I suppose.
Definitely.
I'm like you. The other day I got a penalty of some sort,
Oh, yeah.
and I said to my wife, just pay it, that's fine. It seems like there comes a point where you feel, well, I guess you understand better the system and
Yeah.
like you said, the roads,
The
Social
roads.
Security. I mean, the federal government funds a good chunk of the Medicaid program,
Yes,
which
definitely.
is access, for instance, in Arizona.
Exactly.
So, a lot of times they say, oh, it's free health care, but it's really the federal, with our tax dollars,
Exactly.
funding the Medicaid program at the state level.
At the state level, you're right. That's exactly right. And like Medicare, the Part A, typically everybody qualifies for that, so there's no premiums. Okay, now a person that did not have enough credits for Medicare Part A, they have to pay like $440 a month. So you consider that, because
Right.
so that's how much the government is paying back to us.
Right. And then there's the state tax. So we already spoke.
Right,
The
right.
property tax typically is a state tax.
The
correct?
property tax is a state tax.
The tax that we pay for the homes,
And
for
it's
owning
by,
a home.
Right, and it's by county, actually. It's by actual county.
So you have federal, state, county. There's even cities, right?
Yes,
City taxes.
right. And what we do is there's what they basically call them is sales taxes
Right.
for the county and for the city.
The cities. But the 1040, the tax season mainly refers to federal income tax.
Yes,
Right?
federal income tax,
Right,
the IRS
right.
federal income tax, and then from there you can deduct some of the taxes that you pay to the state or the
Right.
city.
So based on this, we should feel pretty okay, at least okay, to make contributions to the federal
Yes,
government,
yes.
so that the services keep running, the schools, the water, the roads, the health programs, even housing gets a lot of help from
Oh,
the
yeah,
federal
exactly.
government.
Yeah.
To help folks who cannot, make ends meet,
Exactly.
to get a home, etc.
Exactly.
You have programs such as extra help with Part D,
Right,
the
right.
Medicaid or Access. I mean,
Exactly.
there's just the school. There's just so many
Yeah,
areas where we benefit. So we should, I guess, have enlarge our scope of seeing this as a contribution.
Exactly.
You
It's a
know?
contribution, especially
Yeah.
like schools, like you said, especially here in Arizona, the state taxes we pay or the property taxes, I mean, do go to the
Right.
schools. So,
But you
that's
hit
important.
a key phrase: fair share.
Fair.
As long as we
Exactly.
make it fair, we'll be fine, right?
Yeah, and I think that's where the problem lies. Is a lot of people say, "Why should I have to pay? He's not paying," you know. But I think you have to feel comfortable with yourself. It's okay. That's my fair share. Okay, I can see that.
Yeah. Let's talk about we have a progressive tax system. So we pay taxes on a progressive basis, if you will. Can you
Yes,
explain
exactly.
how that is?
Yeah. So they what that is the different tax brackets. Okay, for example, and they're based on your income. Okay, they're also based on your whether you're single, married, filing jointly, or head of households. Which is head of households is once you have a qualifying child or qualifying person, you can file head of household if you're not married. Okay, and the rates are different. For example, the first I'll just take the married filing jointly, for example. The first 10% of your income is not taxable. Okay? That's good. So and then the next from 0 up to 19,400. I'm sorry, 19,400 and above is taxed at 12%. And there's another next bracket is 22% up to 78,950 and so forth up the line. So the more you make, the more, and this is a taxable income, and not the gross income. Not the
Right.
good.
And we can explain that just
Sure,
a bit. So
sure.
basically, a progressive taxing. So let's say somebody falls in the 37% bracket.
Right.
But it doesn't mean that all that taxable income will be taxed at 37.
No,
right?
not at all.
So it'll be whatever fits on bracket 1 will be
Right.
charged at 10%. Whatever fits on bracket 2 will be charged at 12,
Exactly.
and then at 22. So not the full taxable amount
Exactly.
is charged at the same rate.
Yeah, like I said, the 510,000 is what the 37% of. You're not charged 37% of that amount.
Right.
It progresses up.
So
by
that's what
bracket.
progressive taxing
Yes,
means.
exactly,
So
exactly.
you are being charged a higher rate as your taxable amount increases.
Exactly.
That's a good point.
That's
I
a good
think.
point. A lot of people get confused sometimes because they say, "Well, I've never paid this much tax," and so, "Well, now you made more money. Now you're in a different tax bracket. So now you're paying a little bit more for that
Right.
extra money you earned."
Right. But again, it's not the full taxable amount,
no.
but just whatever amount. So every the bracket will tell you from this amount to this amount you'll pay at this rate,
Right.
and then from this to this another rate, and so on. That's
Exactly,
progressive.
exactly,
That is a very important
It is
point.
important, and again, it depends on your filing status.
And for the most part, a person who is married, in general terms, it'll be better if that person files married filing jointly. For the most part,
Yes.
is that fair to say?
Yeah, that is fair to say. You get a bigger deduction, and a lot of times you can't really file marriage separately unless you've been really separated for more than 6 months. Okay, so legally, you really can't, but people still do, I guess.
Now, here's another thing. So if people, depending on their status, marital status, they don't make enough to
Right.
file taxes, right?
Right.
They don't have to,
No.
obviously. But if somebody is getting themselves ready for a possible application for residency in the future, it might be in their best interest to do it using the IT number,
Yes,
correct?
definitely, because and it all depends also, like for loans and stuff, they might come back and look at your previous tax returns. Another good reason to do that, especially if you're using one of the free tax services, like TaxAid, is that when we file electronically, everything goes filed electronically, goes up to the IRS. If there is identity theft, they'll find out right away. Okay, so that's a good protection to have.
Got it. Now, here's another point that I think is important to mention. So I can think of 3 ways by which someone pays another, an entity pays another entity.
Right.
You have the most common one, which is your W-2.
W-2 for employers.
That means you're an employer, and so when an employer gives the W-2 to the employee,
Exactly.
it also sends it to the IRS.
Exactly.
So then the IRS definitely knows that person has been paid that amount of dollars.
Exactly, and each employee has what's called an EIN, Employee Identification Number.
Got it.
And let me tell you, the IRS does verify.
Right. Same thing with 1099?
1099 the same way. There's an EIN for the whoever produces.
So if
the
I was to
1099.
hire somebody, or let's see, if someone used to was to hire me
Mm-hmm.
and pay me with the 1099, they would give me a 1099, and the
Right.
same 1099 would be sent also to the IRS.
Exactly.
But where it gets tricky is with cash.
Right.
Go ahead. You were going
Yeah,
to say
I
something.
was going to say, well, with the 1099, you have to be a little careful if you're the one receiving the 1099, because what that company is doing is hiring you as a private contractor. Okay, so now you have to file what's called a Schedule C, and you have to file as self-employed.
Okay.
Okay, and you know that FICA that we were talking about, and so that typically the employer pays half of it, and you pay the other half. Now, when you're self-employed, you got to pay the whole 14%.
Right.
And that's what's called a self-employment tax. Okay, so
But then you also have deductions that.
oh yeah, you can have expenses
right,
and all that,
right.
and then even actually half of the self-employment tax is actually adjustable as well.
A point that I think is important to mention, because the law says that you have to report income even if it's cash.
Exactly.
But when somebody gets paid cash, there's no record of it.
No.
So even though the law says that you have to file,
Exactly.
if someone decides not to file, there's just no trace. The
No, there is
government
no
will
trace
just
at all.
not know about that money because
Exactly.
there's no form that was submitted.
Exactly. But then it also is not good for the guy receiving the cash, because that money will go into for Social Security at some point. You do have to pay a little bit of that. But yeah, definitely there's no trace. We do at the tax aid, we always say, okay, was there any cash that we
Right.
ask? If they say no, then fine. I mean, whether
And let's keep in mind that the more money you make and
Right.
the more the deduction, the FICA tax for Social
Yes,
Security
exactly.
primarily, if you don't report, or the
Right.
more you report, the bigger your check will be when you retire.
Exactly,
So by you
exactly.
not stating all the facts, or hiding, or deciding not to report a certain amount
Right,
of money,
right.
in the long run, you're hurting your Social Security
definitely,
check that
definitely.
you'll get when you turn
Exactly,
when you are of
exactly.
retirement age.
Exactly. And then there's also what's called an earned income credit, whereas the money that you earn, if you have dependents and so forth, the higher you have income, and it goes up to a point and then drops down. But you get, if you report that cash, you get a better rate of earned income interest or income credit.
Can you file for taxes for past years?
Yes, you can do. You can file back 3 years.
Are there penalties for not having file on time?
If you owe money, then there will be a penalty.
okay.
If not, then that's fine, because they kept the money for that time. But if there is penalties, I mean, if there is that you do, then you do have to
Is
pay
that
penalties.
called tax liability?
Yes.
Okay,
yes,
so
yes.
if you owe money to the government and
Right.
you're filing for past years,
Right.
you're going to have to pay the taxes plus a penalty.
Plus a penalty, right?
Got it.
Typically, it's like 10%, something like that.
Got it.
20% maybe.
Let's talk about this terminology here about so you have the gross income,
Right.
which is every penny that you made,
Exactly.
and then you have the adjusted gross income.
Exactly. So what you have is what's actually reported to you through 1099, financial 1099s, capital gains, W-2s, and then you take adjustments to that. For example, if you had school tuition that you paid, self-employed tax, for example, is adjustable. There's a lot of adjustments that you can take off of that.
Actually, I understand that even the Social Security and Medicare contributions are tax defer, right?
It depends. Okay, the Social Security, it depends on if it's a married couple, and if you're half of your Social Security and your other income, if it's above 35,000, you do have to pay some taxes on your Social Security.
Got it.
Okay,
Got it.
and that gets computed in there. So anyway, so that becomes all your adjusted gross income.
I was referring more to the deductions that the employer does. That is also not considered in your taxable
no,
amount.
you're right.
Correct.
You're right. No, you're
so
correct.
the Medicare,
Yes,
even the
the
medical,
FICA,
even
yeah.
the medical that you pay is tax deferred. In other words, it's not. It's going to be deducted from your gross
Exactly.
to come up with the modified adjusted gross income, right?
Exactly. It's pre-tax dollars,
Right.
so you don't have to.
So adjustments and all those items that we just mentioned will bring the taxable amount down.
Exactly.
Okay.
Exactly.
Okay. That's a very important terminology.
Yeah. And
So-
there's quite a few of adjustments that there are.
So gross income, modify adjusted gross income.
Right.
And then what is the amount? What is the amount that is the one that the tax break or the tax rate is going to be applied to?
Oh, okay. So once you get the gross income, you get subtract the adjustments, okay, and then you come up with a adjusted gross income.
Okay.
Now you take that and you apply the deductions. Okay. For example, some of the deductions went away since last year. We used to have a $4,300 deduction for each dependent,
Right.
and for each husband and wife, that's gone. But now there's a standard deduction that has gone up.
Right.
And for a married couple, married filing jointly is $24,400. So that comes off. Okay. And then any other credits that you have, child tax credit, for example, you know, all these apply as well.
So adjustments, deductions to bring that taxable amount down.
Right. And now you get to the taxable income. Is what they call it.
So now when you come to the taxable income, then they calculate the amount of tax that you owe, and then comes the credits.
No, the credits will come first. The
Oh.
credits will come first. So if you have, now you got the taxable income. You take the credits that come like child tax credit.
Right.
There's a dependent credit now that's $500. If your kids are over 17, but they live with you the whole year, and you provided more than half, so that 500 comes off. Okay, so those are credits.
Right. So because of time, dependence. A lot of people claim dependence. So now I understand that the rule says that the dependent has to live with you, except if they are your parents.
Exactly. If your parents don't have to live with you, but you do have to supply more than 50%.
At least 50% of their
50%.
support.
Exactly.
Okay.
And the same thing. Yeah, I misquoted a little while ago. So what you do is you take the taxable income, and that becomes, it says this is how much your taxes are.
Right.
And then the credits deduct that tax. That you
Got
pay.
it.
Got it. Okay.
So deductions and adjustments bring down the taxable amount.
Right.
But the credits will bring down the amount that you owe on taxes.
Exactly.
Oh,
There
we
you
got it. Or I should say, I got it.
And then the other thing is, if they're non-refundable taxes, okay, if you do have a tax credit, let's say of $1,000, but you only owe $600, then only the $600 gets taken away, so that you get down to you owe zero taxes.
Yeah.
You can't claim the whole 1,000. That's what's called non-refundable.
Perfect. Because of time, if you made $69,000 or less, and this is not your gross income, but the adjusted gross income, you can file for free.
Right.
And there are pages or sites that will not charge you to file it, but you have to start the process from irs.gov.
Exactly.
If you go to irs.gov and then you go to the free file, I think it's called, and you'll be taken to several companies that will allow you to file for free. That is very important. But if you are watching the video or the Facebook Live, I did include a website called aarp.org/tax aid. If you go to that website, you can find a site where AARP is going to help you file for free.
Exactly.
This is very, very important. aarp.org/tax aid, and you will be able to input your zip code. And then it'll tell you the place and the address of the nearest site to you, so that you can go and file your taxes for free.
And here in Arizona, we have at least 80 sites.
How many?
80.
80.
Sites in
Wow.
the
Yeah.
state of
And
Arizona.
obviously, if you are out there and you have some time in your hands, as they say, and you want to volunteer, I'm sure, Frank, that they will be
Definitely, yeah.
welcome.
Yeah, we would welcome volunteers. They're trained, they're IRS certified, and it's an excellent way to learn about taxes.
And obviously help the community.
Exactly,
Yeah.
exactly.
Because it can be pretty expensive filing taxes
Yes.
when you have to go to pay for it,
And
right?
a lot of people, they that's what they don't like. They have to pay $300, $400, $500, and
That's amazing.
right. And the
Yeah.
tax aid sites are free, absolutely. And I guarantee you, everybody's IRS certified,
Yeah.
so they do an excellent
And
job.
you and I spoke off the air that anybody who is computer literate should be able to file their taxes on their own, especially if they have a simple, I guess, case.
Yes,
It's not
yes, yes.
complicated. They don't
Right.
have houses and
Right.
that. I mean, it's just basic
Yeah.
basic income from a job. And they're computer literate. They can go to
Exactly.
irs.gov and they should be able to file their taxes themselves.
Yeah, definitely.
We run out of time. Thank you, Frank, for
Oh, you're
being
very
with us.
welcome.
And
Thank
we
you.
hope that you enjoy this show. This was AARP Arizona Hispanic Connection. Have a great day.
Diálogo comunitario.
Ofrecer recursos y herramientas para elevar la calidad de vida es el propósito de
Diálogo comunitario.
sus servidoras
Claudia Saucedo
y Mirna Pineda.